Welcome, and thank you for joining us today. My name is Sivan Pliskov, and I'm an Associate Director at Carbon Intelligence, and will be chairing this afternoon's panel. We've got a great event lined up today to explore the importance of valuation to the real estate industry. We have some amazing speakers from across the value chain of the built environment who will share with us experience and expertise. We have some friendly faces on today's call who already know Carbon Intelligence, but I'd like to do a quick introduction for those who are new to us. We are a team of strategists, technologists, and engineers who believe in business as the solution to a zero carbon world. And we work with our market-leading clients on multi-year programs to achieve their sustainability, energy, and carbon reduction goals through strategy, governance, data, engagement, performance optimization, and reporting. Thank you, IPSX, for involving us in this event. IPSX and Carbon Intelligence have published 3 papers to date, with a third one on valuation due out shortly following this webinar, aimed at helping real estate owners to understand more about the steps needed to create more efficient and new zero buildings. Before we begin, a bit of housekeeping. We'll be recording this webinar and we'll send it out after the event. You'll also see a chat box on your screen. Please do add questions throughout the webinar and we'll answer them at the end. Please can you note which speaker you're directing the question to? And if we run out of time to answer all your questions, we'll make sure we follow them up afterwards. So, shall we begin? The transition to net zero will fundamentally change asset valuations, as investors are seeking to avoid stranded assets. To date, sustainability had little impact on real estate valuations, despite a common assumption that there is a significant connection between the two. One of the reasons it has been challenging for valuations to take sustainability into account is that valuations predominantly consider historical trends. However, sustainability is focused on future risks. Valuers and sustainability experts are talking about similar concepts, asset risks, but looking at completely different timescales and periods. Valuations is highly regulated and has strong legacy structures, where sustainability is innovative and has the flexibilities of a nascent field. In this webinar, we will explore the importance of net zero and asset valuations and the likely effect this will have over the coming years to investors as well as asset owners. The panel today will discuss what investors in real estate might now expect to see being put into place over the coming months and years by valuers, and how this will start to affect valuation of real estate assets and what this will mean for asset investment decisions. Today, our panelists are Chris Strathon, Director, Valuation Advisory at JLL, Oliver Light, Director at Carbon Intelligence, David Partridge, Senior Partner at Argent, and Rob Bould, Non-Executive Director at IPSX. Panelists, would you like to set the scene as per your point of view? Ollie, please, if you start.
Yes, well, firstly, thanks for having me. It's great to be here. And I think the lens that IPSX can provide in looking at single asset transactions would be really interesting. And from a carbon intelligence perspective, we've been working with a host of different organizations in helping to set their net zero pathway. And we've been looking across the whole life cycle. So we're looking at developments, and we're also looking at, in operations, at different assets and whether or not they will be able to achieve net zero in the future. Now, a big part of that from our side is not only setting that pathway, but achieving that buy-in, achieving being able to demonstrate the business case that companies should invest. And one of the really interesting facts is the fact that 70 to 80% of buildings that will be around in 2050 have already been built. And so retrofitting will become a huge focus area in the future. And we've actually been working with REITs and other real estate investors to be able to say, across a certain amount of billion of assets under management, what will the actual cost look like in terms of retrofitting those assets? And once we put that number together, the obvious question from the boardroom is, well, okay, if we're going to invest that amount of money, what's the upside for us? And we are seeing with our clients, just due to the nature of where the compliance is coming from, where the market's going. So BBP have 300 billion of assets under management, 11,000 buildings signed up to net zero commitments, who are going to be focusing on what is a green asset and what is a brown asset. And you'll start to see that feed into the acquisition process and so forth. And in the short term, we know if we get this right, in terms of immediate value, you can reduce energy costs, you can reduce life cycle maintenance costs. But in the medium term, you're likely to benefit from access to, say, cheaper debt, green loans. Equally, when you're looking at selling an asset, the likelihood of being faced by a higher discount rate is going to be reduced if you can demonstrate a long-term focus around the asset's decarbonisation. And one of the last pieces that we've been looking at most recently has been a new framework called CRREM. And CRREM is a tool produced from Europe, which allows an investor to see when the stranding date may be. And aspects like that are now allowing real estate investors to say, well, hold on a sec, I'm about to buy a brown asset, I need to avoid that, or I need to build that into the discount rates. So there's lots of different angles that we're seeing, and we're just trying to use the data as well as we can to provide the evidence back to start our clients on this net zero journey.
Thank you, Ollie. Chris, would you like to go ahead?
Hi, yes, thank you. And I've been involved in looking at the impact of value on sustainability for over 15 years now. And certainly during the last 3 years, I've seen a massive interest in ESG investing and people looking at the concerns around climate change and how it might impact their decision-making processes for buying, selling and holding real estate. And as a valuer, there is no doubt, as you rightly pointed out, we tend to look in the past because we base an awful lot of our valuations on comparables in the marketplace. And the Red Book basically indicates that we have to value market value. That's the basis of valuation, reflecting a transaction in the marketplace. So really, it's how do we reflect the implications of net zero carbon or ESG within valuations at the moment. And a lot of that is reliant on more accurate data that is showing some green premiums. And JLL produced research last year, particularly looking at the central London market, demonstrating lettings over the last 10 years, where we were able to identify green premiums for rents for BREEAM excellent buildings and those with EPC ratings of A, which is terrific. But one of the interesting analysis of that and the arguments about that green premium being present is there is a shortage of quality buildings of that standard. And therefore, as tenants demand better buildings through their ESG credentials, they're driving that demand for those buildings, which are driving those rents. So will it become the norm in the future, and that green premium disappears? So that's the upside. That's why we're looking at green premiums, and we could actually value that. But again, as Ollie's highlighted, there's the risk associated with buildings that are not meeting those requirements, whether that be tenant demand or through regulation. And that is where we might be seeing a brown discount. And I call that really accelerated obsolescence. That is what we would be seeing, particularly if regulations drive that change and demand for net zero carbon buildings, say by 2030 or 2050 is the way out actual date. So from that perspective, it's really how can you identify that risk and how you can reflect that in valuations, and will the developers manage to provide the product more quickly and more cheaply to help us with analysing those properties.
Thank you, Chris. Many great questions, and that I hope that we could be able to perhaps answer them during this webinar, or if not, at least in the next few years. David, your point of view as a developer and as a landlord.
Yes, thanks very much. It's really interesting. We are certainly at a tipping point, I believe. We started King's Cross, Argent first got involved with King's Cross back in 2000. We got our outline planning permission in 2006. We didn't start construction until about 2008, 2009. And at the time that we built and designed the master plan for King's Cross, we were very forward looking. We were thinking at that point, why should we be looking to achieve a low carbon, highly sustainable project? And we felt that there was no real sort of market drive specifically at that time to do so. There was certainly no regulation saying that we should, other than building regs, which are all about insulation. There was definitely BREEAM in those days, which we actually were involved in putting together, actually, interestingly, back in the 90s. But at the same time, we set out an aspiration to actually be 20% better than building regulations. And so we achieved that by building in a district heating network and a district cooling network from a central energy center, which we put in right at the very beginning of the King's Cross project. And that has allowed us to achieve BREEAM outstanding for every single office building that we have built. It's allowed us to ensure that there is not a single boiler in any one of the 8 million square feet of buildings that we've developed there, because they're all effectively served by the central district heating system. And now that we are looking to be able to, as the grid decarbonizes, it means that the electricity that goes into the system can be carbon neutral in operation. We're also in the process of acquiring a gas system, natural gas system, which will allow us to run the combined heat and power systems in a net zero basis. So we built all of this lot in advance in the hope that the world would catch up with us at some stage. Certainly tenants have. There is no doubt that the likes of Facebook and Google, who are all insisting now on net zero energy, will, they have already voted with their feet and come to King's Cross. Brent Cross, which is a new project that Argent Related is in the process of developing and is actually at the starting point, and we started that about 2015, 2016, is actually at the beginning of the new era of the tipping point, whereby if we don't do this sort of thing, we believe that we will actually get valued down. And so we're in a situation where we're actually building all of this in out of a necessity rather than out of an aspiration. And obviously technology's moved on quite significantly in the last 15 years. We can seek to be zero carbon in operation almost from the very beginning, rather than something that we're converting King's Cross to at the end. And actually what we're really focusing on is trying to be zero carbon or net zero in terms of embodied carbon as well. And that's much tougher, obviously, as we look at different ways of constructing buildings, using low carbon concrete, using more timber. In fact, we've actually brought that in to a lot of the later projects at King's Cross as well. So it's a really interesting journey that we've been on. And I think the whole question of the difference between a green premium and a brown, reverse premium is or deficit, or whatever the penalty is a really interesting debate to have, and I'm sure we will talk a little bit more about that during the course of today's webinar.
Thank you so much for this. And I think it is interesting, as you mentioned, that back in 2000 you were ahead of the market, and now you're leading it. And so, but still there's so much, and in the meantime, perhaps the market and regulation or other stakeholders have come closer to you, but there's still so much more to be done, and where those solutions are going to come from. We turn out to Rob. you really bring the perspective of the investors, of the exchange. What's your point of view?
Sivan, thank you very much. And it's always great to hear David and Chris talk about where the market is and what they're seeing. I suppose in my introductory comments, I just want to start to bring some of the discussion to how you translate the climate goals into action in a real estate portfolio. Because I think certainly over the COVID period and prior to that, as Chris was saying, he's been working on sustainability for a long time. And our partnership with Carbon Intelligence is really valuable. And I just want to bring out the fact that the general commentary that we're hearing is here to stay. And I think we can all agree on that. And so why is IPSX so committed to generating this engagement? And what is IPSX for a number of your listeners? And it's a stock exchange. It's talking about fractionalization. It's a public market. I have spent my whole career in the club, which is real estate, and it's been fantastic, but it's been a private club with small groups of people. And it's the transparency issue that a public market is so important that we are needing to address in this discussion. And let's just take that a bit further. What I don't think the real estate industry, I think it's getting there, and COP26 will show us this, but is it waking up to the fact as a primary investment group that actually there's a societal shift going on in terms of how the occupants of those buildings want to use buildings? And it's great to hear David and, if I may put it, the members of the club talking about this. But there is going to be a huge behavioural change for the standing stock that Ollie referred to that is needed to be done. And one of the big flaws in terms of what's going to happen is that I can talk about investors, but the poor old investors, if they have occupational tenants who simply won't provide the information to them because they believe their civil liberties are being infringed because they're monitored, etc., you've got a big issue on your hands. And this is a much wider issue than just the property industry. It's a societal issue. It's a behavioral issue. And again, I will stop because I know, Sivan, you want to get on to some of the specific questions, and I see they're starting to trip up. But I was intrigued how the carbon debate was entering into the development process. And the example of this that I'll give, only because I saw it on one of the news feeds that I think was so important, was that GPO wanted to redevelop at City Place House. And one of the arguments advanced by the Barbican residents was that the carbon intensity of doing the works that they required would be disadvantageous to the environment. This is a huge behavioral split, which is going to build on the NIMBYism that sits there. I haven't got all the answers. What I do know that a stock exchange with properties that are suited to the stock exchange, with the work and advice that we can get from Carbon Intelligence and other providers, is making the market that I've grown up in and had a career in much more transparent. And I think that's a key factor.
Thank you, Rob. So clearly many questions ahead. The journey is far from finished. If anything, we're in the beginning of it, and there's a lot to get to in the next few years. I mean, some people think, again, different stakeholders across the market think that we have time. 29 years is not a hell of a long time. So we're looking forward to that. And very looking forward to getting into our discussion. So our discussion point number one would be, we'd like to actually bring about the debate between the stick and the carrot. How much should we rely on government to hit with stick to get us to do what we need to do, versus how much of a carrot will there ever be in form of a green premium? Or is there ever enough to reward the extra thinking and costs that are coming upon us in the long term as we design and develop future buildings? David, would you like to start?
Sure, thanks very much. Yes, it's an interesting one because this was something we will say that was, in our minds at the time that we committed to building all that infrastructure at King's Cross, and it's certainly in our minds as we're looking to do the same thing again at Brent Cross Town. It's a real toughie because at the moment, the true cost of carbon is not properly built into society's thinking. You can talk about, if you get on to the British Air, I shouldn't be quoting British Airways, but if you buy a flight, you can offset the carbon at somewhere between £5 and £10 per ton by pressing a button, and someone somewhere will grow a tree or preserve some bit of the Amazon for you, and you'll feel great about that because you'll say to yourself, well, aren't I good? I can take this holiday risk sort of guilt-free because I know that it's being, but that's because someone else is doing something about it for me. But the truth is that the real cost of that ton of carbon is anywhere between £50 a ton or potentially up to 100. And that's the cost of carbon that if you go into the European trading at the moment. So society isn't paying the real cost of the of all the carbon that we're generating. And one way of looking at it is simply to say, well, okay, in that case, we'll just tax everything at £50 a ton. Whatever you do, if you buy a bunch of bananas, you will make sure that the amount of carbon that growing and transporting and selling those bananas gets, you get taxed. And actually, that might not be a bad idea because it will, make everybody pay for the cost of the of what we're doing. And then as long as that money is all translated properly into action to either reduce the carbon in the first place or to offset it properly or to capture it, there are a whole bunch of different technologies coming into play. As I said, many of which we in the real estate industry, whether we're building new or retrofitting or whatever, we're all using this, and we could draw on those funds. The other is to do what Chris is suggesting, which is to say that there should be a premium, and that you encourage people to spend that £50 up front because they're going to sell that bunch of bananas for 50p more, or in our case, we're going to be able to rent that building out and get a premium in our rent, or when Chris comes and values it for us, or we go to the local our banks and try to borrow, we will get a better interest rate for our cost of funds, and ultimately we need a combination of the two, I think. And I think government can do an awful lot here. I think we are going to need governments to come together and do this, and I think COP26, I hope, is going to be more about talking about solutions to these problems, whereas the previous Paris Agreement was all about just admitting that there was a problem in the first place. And again, that's why I say we're at a tipping point now. We're at a really interesting point where we're moving into solving this rather than even acknowledging it. But government can do both. It can do a combination of setting building regulations. It can do a combination of setting tax regimes in such a way either to, again, penalize people for using too much or to give them rewards for crediting. But either way, Rob is right. We need absolute transparency. You need to know how much that bunch of bananas has actually generated, and that same thing needs to happen. I keep using bananas because there is actually a book called, which was written by one of Berners-Lee, wasn't it, about how much is this bananas, and it's a great example because if everybody could actually work out in a completely transparent fashion exactly what the impact of what they're doing on a daily basis and on a annual basis, and for things like real estate, which is going to be around for 50 plus 100 years plus, then we could all truly appreciate the cost of what we do. And then you've got a benchmark against which both regulation and other and the carrots can be applied, because then people can work out you know, what the value is of paying the extra cost to mitigate or set off what they're doing in the first place. So I'm very optimistic about this. I think we need a combination of the two. And I think transparency is absolutely critical, because then we can measure things properly.
Yes, thank you for that. And you mentioned COP26, and I think very much such as yourself is that, you know, in the previous session they were talking about the what and the why. Why are we here? What targets should we put in place? And really, the view and the hope and the vision for COP26 would be the how. Now, how do we get there? So hopefully, you know, everybody across the value chain could bring their pens in order to reach those targets. Ollie, I turn to you because I wonder, when I think about the carrot and the stick, and when I think about the various stakeholders that we deal with at Carbon Intelligence, for me, a lot about it is how much do they relate to this area, in the sense, how important is this to them, and what is more likely to get them to do something about it?
Yes, so the way I would look at it is, I think that the stick's been really important up till now, and will still play a really important role. And then I think the carrot will replace that, and actually the requirement of legislation to really drive this forward will diminish, and have less of a role within this. Right now, there's no doubt that MEES, so energy performance certificate regulation, suggesting that we may need EPCs to be B or above by 2030, is going to have a big impact on the marketplace. And when you look at the Red Book, they reference the MEES legislation and advise that in that valuation process, you make sufficient reviews. Equally, there's other legislation like the energy rating legislation, which has worked really well as neighbours in Australia, and has linked to improved capital value through an MSCI report that I looked at. Now, bringing that in and asking any building of over 1,000 meters, any commercial building of over 1,000 meters squared to do that, will improve data transparency, will improve the engagement with occupiers, and actually allow us to finally really understand how buildings are truly operating across the UK market. But moving ahead, I think where you've got these big commitments, say UN Net Zero Asset Owner Alliance, asset manager commitments, where you've got trillions of pounds that need to hit certain net zero requirements, they're going to start pushing that down, and it's going to start feeding into different assets. And those that got there before will benefit from that carrot, whether it comes from a government or just comes from being ahead of the marketplace and benefiting from many of the areas that Chris, David, and Rob have talked to, such as being able to attract the right type of tenants and get that rental premium, or if the government's going to offer it some sort of incentive, or say paying a lower offset price in the future, there's going to be lots of benefits there. And the last point I'd make actually is there is an argument for some legislation that it can be too intrusive, and it can cross over, and people can get around it. So an example of that would be SFDR, which is a European piece of legislation, and there is an argument that some companies are just putting their operations outside of Europe, or not necessarily reporting within the framework. So legislation won't solve everything. I think it will require more transparency, as was discussed, but more engagement around this.
Thank you, Ollie. And you did mention two words, Red Book. So immediately I thought of you, Chris. How would you like to jump into this one?
Yeah, well, I mean, interestingly enough, the Red Book is very much about process. And actually, when it comes to valuation methodology, that is still left to the valuer's discretion. And I think, without getting too technical, at the moment we use mostly comparable methods through the investment method for investment properties. And really, in Europe, they tend to use discounted cash flow methodology more, whereas we use that as an analysis tool. But the good thing about that is it is more explicit in how you then look at the factors impacting value. And principally, you are looking at how a cash flow works over time. You're looking at the rents achieved in a building. You're looking at where rents will go over time, and you're looking at exit yields and costs within that cash flow, and then looking at the internal rate of return that can be generated from that property when you're using discounted cash flow. And I suppose that the interesting thing is from a carrot perspective, you know, we've talked about transparency a lot. The valuer is looking for benchmarks. They're looking for differentials between buildings. And obviously, if a building has is meeting particular benchmarks, which is where we're trying to look at more data regarding particularly operational carbon emissions of a building, then you can reflect how much that might be required to be upgraded in an existing building. To reflect that sort of stick that will be pushing additional costs, which might be through the legislation and through, for example, the carbon taxes that both David and Oliver have spoken about. Whereas on the other side of the carrot side is that if the market is saying that actually we're prepared to pay this type of rent for this type of stock, and that investors are prepared to pay these types of yields for that type of properties, then that's what feeds through to the valuation and to the better returns. And that's without even adding in the finance, which can also assist with better returns. And to a certain extent, you know, at the moment, you know, the UK GBC research into building costs have identified that to get to a net zero carbon building, the additional cost over and above standard cost is between 10 and 16%. Now, it's, you know, how can you get that, you know, cost back in terms of value, because cost does not always equal value, and you're having to follow the market to see how you can reflect that. But if you are getting cheaper finance through green loans, then that all helps. And if at the end of your development you're able to sell at those premium rents and at the best yields, because then that is the norm, that is the prime yield, you will make that return. And that's what we're trying to look at in more detail at the moment.
Thank you. Rob, return to you. We heard the word transparency. How does that play into the carrot and stick?
So I can bring it back to transparency, but again, I've seen the work that has been done by the Green Building Council and the various points that have been made by Ollie, David, Chris. And I sort of get it, but my challenge to David, and bearing in mind he wears two hats, sorry David, president of the BPF as well, is that new developments is a very small percentage of what we have in the environment. So I applaud it. I think it's fantastic. I think the word's great, but I'm in no doubt, Sivan, that there's got to be a lot of stick. Because how do you actually get your tenants who refuse to give you the data to actually allow you to complete the assessment of the standing buildings? And let's just also put this into context. Commercial property market, and this is very domestic in the UK, is about $1 trillion. The residential market is 6 times that. So 6 times the size of the commercial building. So the behavioural change that I was talking about at the beginning of this call is how do you get that body of opinion? So I, as a commercial surveyor for many years, I can tell you the industry hates any intrusion from government, absolutely abhors it. But because it is a societal shift, I just don't see, unless you are empowered to get that data, that this can happen. And it won't, it's great to see new build, but it's the $100 million, it's the $100 billion question. How do we move forward? And I believe, and then coming to transparency, we live in a data world, and you know, we want to see this data, we want to measure it. I cannot tell you the number of building management systems that I've seen in managed buildings that have never really been switched on. The lights remain on, they don't work. So it's that behavioural change that I'm making. And I think from a BPF point of view, from the bodies that represent the industry, It's thinking about how we can come forward with the stick part. Yes, David, to add to the carrot part, to actually encourage that behavioural change without it being so Armageddon like the EWS1 form that it actually stops the market. It needs really, really in-depth thought. And what a better way to do it than running up to COP26, because there'll be hundreds of civil servants running around trying to work out what the outputs of that meeting are going to be, and much more informed than I am. But it can't be so draconian to stop the market, but it's got to move that behavioural shift from transparency.
Thank you, Rob, and that's actually the perfect transition to the next question. So I really thank you for that. And for me, it's about tenants. What do tenants want? What's the difference between major tenants versus small tenants? Multi-let versus FRIs? How can we get them on board with us? How can we take them on the journey? I think that's absolutely key, because technology and the solutions and the engineering is only going to get you so far, and thereafter it's that behavioral change, all of us together moving forward from there. So let's talk a little bit about that. David, would you like to start?
Yeah, sure. Just to refer back to Rob's point just a second ago, he used the word government intervention and in-depth thought in the same sentence, which I think is if only we could have those two things at the same time, then yes, we have got hope. But like you again use the example of the EWS form, that was a knee-jerk reaction to an issue, a very, very serious issue, which has had a whole bunch of unintended consequences. And that's why I agree with you that we should be looking to regulate a certain amount. But the problem is, the way government works at the moment is that it simply doesn't think through the consequences of the of what it's asking for. So that is where I do believe we have a place within the the industry must continue to keep talking to them, and I'm not suggesting for a second we don't. We also happen to sit on the advisory board of the Construct Zero, the Construction Leadership Council body that's equally looking to bring in a framework for net zero. And as you know, I'm a trustee of the UK GBC, so I'm doing my best to sit on as many of these things and to ensure that all of this lot does land with government, and that they do come up with appropriate guidelines. However, I do ultimately think that it is going to have to be the market that is going to move this. To Sivan's point about what do tenants want, because to use your example of commercial tenants, new tenants, existing tenants, and all the people who live in let's call them tenants, because they call them occupiers. I think that's probably a better way of describing it, because these are the people who are actually living, working, learning, shopping, eating, sport, whatever they're doing within the buildings that we're all building. And that societal change is happening with them. The new generations that are coming through are insisting on knowing more about the impact of what they do. And I think ultimately, again, being an optimist, I think that is going to drive the move to respond to that, so that the owners of those buildings, the investors of those buildings, whether they're old assets that need to be refurbished or some cases, knocked down and rebuilt, or in many cases it's going to be a retrofit, that people will realize that they can put real investment into this, even if it's costing them 10-15% more than it would do otherwise, and reap the rewards for that in due course, if they can do it through if they can look at it over 10 to 15 years. And that is where government can help. That is where the banks are also, and other financiers are coming in with green loans and others, where they're prepared to look at a much longer, risk-adjusted return over a period of time that allows for the payback time that's going to be required to do put the hard hard costs in place now, because we can't wait. We can't wait for 15 years to offset carbon in 15 years' time. We have to offset or reduce carbon now in order to be able to have a hope of hitting our targets in a few years' time. And I think the occupiers are demanding it, and I think that's actually going to be the thing that changes everybody's behaviours.
Sivan, could I jump in before you move on to the David point? I remember when I was chair of a thing called Investment Property Forum, starting a customer satisfaction survey. And the relevance of the next statement is that actually customers only really get engaged when they want to complain about something. And it was a desire, it was a complete non-starter, and it died a death. I think part of the solution here is some form of social movement that you are actually saving the planet. And for that, from a government point of view, there needs to be some form of relief and recognition of those individuals that they are actually working to the common good. Now, that's just a high level principle, but unless you get the tenants supporting and moving forward in that way, I just don't get the pace of change that is going to be required to meet David's point.
No, thank you for that. Oh, Chris, go ahead.
Yeah, because I'd like to add to that, because I mean, this does sort of boil down to tenant demand as well. Because when I talked about the green premium in central London over research over 10 years of lettings of excellent, BREEAM excellent buildings, the issue was compare that to a secondary office above a chip shop in, unfortunately, Bognor Regis or somewhere like that. It's how does behavioural or societal change drive that tenant and that investor who might have bought that property in an auction and really likes just the rent coming in. How do they adapt their building to meet net zero carbon credentials? And how much of that is the stick, or how much is that the market saying, no, I'm definitely not going in that building, and it becomes a stranded asset. That's what I think we're going to see accelerate much more quickly over the next few years, particularly as everyone is, a lot of companies are aiming for 2030 to get net zero carbon in terms of what they do as an operational tenant. So they have to have the buildings to do that. And JLL, I mean, everyone knows in the marketplace that we've been looking for years for a new UK HQ, and eventually, we've signed up to go to Broadgate. It's still not ready for another 5 years. So that's the type of problem we've had. And you can think there are many other tenants of large companies doing that, but it's also the small companies and the type of real estate that they lease.
And just coming in after that, to add a slightly separate view, I think what tenants have wanted have been connected buildings that deal with comfort requirements, are competitive in the market in terms of cost, and often it would be, and we'll have a BREEAM rating. And can that BREEAM rating be excellent? And we'll stop there, and we'll tell the occupiers about that. And that credential, as Chris has mentioned, their research that they did at JLL linked to rental premiums. Now what we're seeing are these companies who've set science-based targets or net zero targets, but it's been very much focused on their own overall business, and very little focus has been on own operations. And actually, when you start to understand the data, they realize, whoa, there's a big gap between where we need to be and where we are now. And actually, we're working with several blue chip organizations to take the core principles that we've learned in real estate and help apply it for them, so that when they speak to their landlords, they know what they want, which they didn't know before, and they didn't appreciate that performance gap. And so I see them wanting that. And I think the last piece that I would say is that they are looking for offices that could, or buildings that can be retrofitted. They often now don't want them to be fully demolished and rebuilt due to that embodied carbon impact. And they also want them to be able to not only hit net zero, but align well with wellness requirements, connectivity requirements, now COVID requirements, and have that great balance. And we've seen some really great case studies, actually, again, not giving Australia too much praise, but some great case studies in Australia where they've been able to hit all those different requirements. And we're starting to take those core design principles into the UK market, which is super exciting.
Thank you for that. I'd like to ask you, from your specific point of view in the value chain, what do each of you think or would suggest as the solutions moving forward that will drive those higher valuations? Ollie, perhaps we'll stay with you around data, around measurement. Where will that take us? How will that bring us forward?
Yeah, I think in terms of that valuations piece, it's really thinking about the data. Taking this back to IPSX, I think this is where IPSX can play a really interesting role in the marketplace, because if they can provide more transparency at during the point where they're looking to list an asset, and it can demonstrate, one, from an energy usage intensity perspective, it's aligned with being Paris proof in the future, or has a really strong plan to get there, then that is a big tick in looking at that valuations piece. Another aspect that we often look at is around the building fabric. So as we know, one of the big challenges has been, say, glass buildings, and how you look to deal and retrofit those glass buildings so they can deal with heating and cooling constraints. And then transparency of data, which we keep on coming on to, could allow for, and I mentioned this point earlier, but access to cheaper debt, to green loans, if you can provide that information back. And there was a good example of CLS getting a basis point rent reduction in doing so. And then having some of the other really tricky calculations. So one we had the other day was we're working on a major office in Brussels, and it was able to get a competitive, it lost a competitive edge because of the messaging. What we've been able to do is understand what it's doing really well against the marketplace, realign the messaging, and help that building market in a much more credible way than other buildings around the corner, which is really, really interesting. So I do think data transparency and being able to show performance will make a big difference.
And I think that kind of transitions really well to what IPSX is raison d'être and what it's trying to do. Rob, what solutions will you suggest to bring us on board so that we can move forward on this journey?
So IPSX is not saying it's the solution to the real estate funding market. We're too long in the tooth to know that. We're just saying it's a new piece of capital markets infrastructure. But the issue is that use the public exchange, because of the work that we're doing with carbon intelligence, with income analytics, etc., are starting to look at single assets in a much more granular way. And to Ollie's point, it's about data and moving us on in that regard. So if IPSX as a public market acts as a bellwether for a wider real estate market in the private sector, in the public sector, it will be absolutely doing its job as a public market should.
Chris.
Yeah, I mean, it's quite an interesting question, and being an advisor here, and I'm interested in what David thinks about this. But generally, in the profession, from the advisor point of view, we do need upskilling in how we look at net zero carbon in relation to real estate, and by that I mean valuers, but I also mean brokers, leasing agents, planners. People need to understand how this all encapsulates in real estate and be able to explain that to investors and demonstrate that transparency. So it's one thing, we talked about benchmarks and differentiating buildings. But in order to do that, the advisor has to be able to be very knowledgeable about those implications. And so, I am noticing that is happening more quickly now. But like I said, I've been at this for 15 years, so I can certainly relate to that myself. But and now we have like a net zero carbon consulting team at JLL, which is great because we're learning so much from them. But we can then also impart that and influence that in our valuations and help investors and banks who are lending on real estate to understand that as well. So I think from our point of view, helping the industry to understand this in more detail is what we need to do through upskilling.
And do you think that will happen through education, through webinars? How do you feel also about all the different frameworks, especially as an advisor, because there's so many, so many of our customers now have to adhere to 10 or 15, be it a must, be it a compliance framework, or be it should do or nice to do because they gain good reputation from it.
Yeah, I mean, it's interesting enough. I mean, from our point of view, we as a company are trying to make sure that it's embedded in our culture. So we're doing that internally, whereas chartered surveyors and registered valuers, say with the RICS Red Book, are meant to be doing CPD 20 hours a year. Now, how much of that they're actually using to do net zero carbon or just reading the press, is up to them. But from our point of view, it's within our culture to understand, to be able to advise clients the best we can about the most pressing issues in real estate. And certainly net zero carbon is right up there at the moment. Thank you.
So David, we turn to you. I think there's so much that we turn to you for in terms of the technical solutions out there. Is it really come from engagement and collaboration? What are your tenants demanding? We briefly spoke about the other day on timeliness on delivery.
Yeah, I mean, there is no one silver bullet, and everybody knows this. But the good news is that there are a lot of solutions coming forward. So within the UK GBC, we've just set up a new solutions unit, which on its own has got 50 or 60 different ideas that have been put forward by members and by others, which we promote, which we allow, which we share, we collaborate. And that's everything from real hard technical solutions around glass and steel and concrete and timber, through to data driven analysis of buildings in use and so on and so forth. So I'm with Bill Gates on this. I think the technical solutions will come, because we all understand that we need to do this. We don't know what they are yet. We need to be behind them. And he's a guy who's putting literally billions behind some of these different ideas. Somebody asked in one of the questions as to whether or not there was a green premium or a brown discount for industrial, and we mustn't forget that side of things. But one thing that I would like to just point out, Chris raised it. So we've talked about government, we've talked about investors, we've talked about tenants. There's the other big players in this field are the banks, and they're the guy who owns that chip shop in Bognor Regis may not be looking for a BREEAM outstanding, but he probably needs a mortgage in order to pay for it. And what is happening is the banks are becoming much more demanding, and that is being driven by the Bank of England, which is actually really interesting. So these guys, I don't know if you've sat on any of the work that they're doing, but they are asking every single business, including their own banks, to project forward to 20, 30, 40, 50 and say, how resilient is your business to climate change? And if you cannot prove that it's going to be resilient one way or another, then you might lose your license to operate one way or another. And so the banks are taking this incredibly seriously, and they are going to be demanding that the chip shop owner actually does something about the insulation in the roof or the leaky windows or whatever it is that he or she is inheriting when they buy that building in an auction. And that is going to be a huge driver too, because without that finance, and people are going to gear up from 10, 15, 20% to 60, 70%. So, it's a big chunk of the X trillion of assets that you talk about, Rob, and a lot of them are in residential assets as well, which are the hardest to get to, the ones that, we don't get rebuilt every 20, 25 years. They've been around for hundreds of years. I've spoken to a lot of the senior lenders. I mean, we've had 2 green loans at King's Cross, and they are insisting. And I think when that happens, that really will have impact on everybody through society, because, you know, let's face it, most of us end up, you know, whether it's a credit card bill or a mortgage or whatever, and, you know, they're going to be insisting that that is a responsibly backed loan one way or another. And I think that impact will also come through eventually into the market and will drive the societal change, the upskilling that everybody's been talking about, and then ultimately the technological solutions that will come forward in order to be able to prove that the assets that we're you know, building, owning, buying, whatever, are ultimately, you know, not going to end up being redundant, because otherwise it's the bank that ends up holding them, because they are the owner of last resort when the chip shop investor hands the keys back because he can't afford to pay the carbon tax any longer.
So eventually, I guess some positivity to it, right? We maintain our optimism. We look forward to working together. I think it is very much the game of collaboration, and all stakeholders would have to pull in, you know, their strengths to it. So before we know it, we've reached the top of the hour, and I would like to thank very much all our experts: Chris Strathon from JLL, Ollie Light from Carbon Intelligence, Rob Bould from IPSX, and David Partridge from Argent. Thank you so much for your expertise and your experience sharing with us today. And I'd like also to thank you, our audience today. And a quick reminder that a link will be sent out post the event of the recording and will be available on the IPSX website. And please look out for Carbon Intelligence and IPSX joint paper on valuation for net zero in real estate. Have a wonderful afternoon. Thank you.
Bye.